everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of June the 12th, 2017. Now, to get started, we're going to begin where we always do with the US dollar index. Now, the dollar is going to have potentially a very difficult week ahead of the FOMC. Now, the reason I say that is we have two possible scenarios here. We have the Fed projections. We could see the dollar make gains prior to that, but if the Fed does not hike on Wednesday, then the dollar is going to come under very, very heavy selling pressure. Now, the other scenario here too is that the Fed does hike, but basically signals that they're not going to hike anything further, maybe not even in September. That also would hurt the dollar. So basically what we've got here is a number of different scenarios that are lining up against the US dollar. On top of all of that, the dollar also has to deal with these institutional monthly cycles that I've talked about over the last basically several months. So when we look at this, a period of known dollar weakness comes in around the 15th to the 17th of the month. So even if the dollar does move higher, we could still see it sell off based on that. So when we look at our key VantagePoint levels, our 18-day predicted moving average is 96.99. We've closed above that, which is bullish. Now, if we go to the indicators here, we can see we're in a very tight channel here on the dollar index, but it is recovering. The indicators from VantagePoint, we've got our neural index higher, our predicted short, medium, and long-term differences starting to turn higher, but the medium-term crossing over the long-term predicted difference is a warning sign that the dollar is going to move higher. Our predicted MACD, we do have a crossover to the upside, and our predicted RSI is recovering, but still not above the 50 line. So the indicators here from VantagePoint are absolutely critical to warn us, not only when the dollar is moving higher, but also when it's moving lower. Now, how that's going to translate into the Euro-US pair, I've talked about this level here again for the last several months, this 113 level. We can assess that the dollar is coming up to these levels, or excuse me, the euro is coming up to these levels. Our key VantagePoint level, that's coming in at 111.68. Now, with this particular level here, we can see that we've had multiple failures off of this swing high going back to October of 2016. So when we look at this a little bit closer, we're going to bring this in, zoom our VantagePoint charts in so we can see this a little bit better. Once again, we can assess that we're sitting right on that critical VantagePoint 18-day predicted moving average. So it pretty much is a make or break area at this 111.68. If we get a sustained break of this area, then we're going to see the euro go lower. Now, when we go, what are the indicators saying here? Our neural index has been down for basically 4 days in a row here, guys, warning us that this was going to happen. Our predicted short, medium, and long-term differences and our strength indicator also pointing down. Our predicted MACD, we can see that that trigger crossed over several days ago back at the beginning of last week when I talked about how important this 113 level is that we clear it. We couldn't clear it. The indicators from VantagePoint were dead accurate. Now, the indicator of concern to me, the predicted RSI, a very powerful indicator from VantagePoint at 56. I'm just going to clear that so everybody can see this. 56.1. Now, we need this to break not only below the 50 level, we need it to break below the 60 for the downside to accelerate. So we want to combine this with, of course, this critical VantagePoint 18-day predicted moving average at 111.68. So if we break through 111.68 here, guys, our neural index is already pointing down. If our predicted RSI can gain momentum to the downside, that will confirm the euro is going lower, at least up until the FOMC. The same thing would apply to US Swiss franc, basically the same trade. The euro goes down, US Swiss franc goes up. We can see we're basing out at the 96 level. The indicators, what are they saying from VantagePoint? Our neural index has been up for basically 3 days in a row here, guys, warning us that this was going higher. Our predicted short, medium, and long-term differences all moving higher. We have a crossover on the predicted MACD to the upside, and our predicted RSI 51.4. So this very well could be a leading indicator that the euro is getting ready for a much bigger move to the downside here. But I think the safer play is longs on US Swiss franc. Now, as we come into the British pound, of course, the election and the UK election kind of blew up in Elizabeth May's face, and she didn't get that majority government, but things are still looking pretty decent there. Now, as we've come out of this very tight channel here, again, you can see that we had essentially a 3-day warning sign from VantagePoint. Our triple AMA cross, our 3-day crossing our 8-day and our 18-day predicted moving average was a leading indicator here that regardless of the election, the pound was getting ready to sell off, which of course it did. The neural index was down for 3 days in a row. Our additional indicators, what are they saying? Our predicted short, medium, and long-term differences, our strength indicators still pointing down. So if we combine our triple AMA cross, we take that to the neural index right here. We continue this on. I want to see a break of the zero line of the predicted MACD. That should accelerate. And then we connect that to the predicted RSI, breaking that all-important 40 level, which is basically showing momentum. Now, we haven't really been able to break through this 40 line and stay below it for any real length of time. So this could be a bigger move to the downside. But in my respectful opinion, the market's getting a little bit carried away here, but the pound really, guys, after this big move up, after this bar that I talked about right here, this particular bar that I've been talking about basically for months here, we haven't made a whole lot of gains past this 129, 129.50, and now we've lost that level. So after all of this, it looks like the pound is getting ready to move lower. Now, as we come into the dollar-yen pair, and again, another very tricky pair to trade going into the FOMC. With my own direct clients, I warn them to stay clear of this pair going into that FOMC announcement. Now, what are when we look at the indicators from VantagePoint, our critical 18-day predicted moving average coming in at 110.82. We're closing the week at 110.30. So as long as we're holding below 110.82, the pressure is actually still to the downside. Now, our predicted short, medium, and long-term differences are moving sideways. The neural index is still pointing down, but this crossover here on the predicted MACD of the zero line, that is signaling a very bearish tone to this particular pair. Now, we are holding below the 40 line and the 50 line, so again, 110.82 is the critical level. I could see dollar-yen advancing for the early part of the week, then basically going flat into Wednesday's FOMC announcement, and then that is going to be the determining factor for the dollar-yen pair here. So be very, very cautious with this one next week. Now, as we come into the USCAD pair, even with the crushing blow that oil took this week, a massive sell-off, we still stayed in this channel. Credit to the VantagePoint software, the 18-day predicted moving average continued to hold here in this 132 area. You can see we've had multiple retests of just above this 135 level right here. So from here, guys, we have to go to the indicators. What are the indicators saying inside this very choppy little channel that we've been dealing with for the last 2 weeks? Well, our neural index is pointing down. Our predicted short, medium, and long-term differences also pointing down. Our predicted MACD failed at its crossover to the upside here this week. And our predicted RSI is moving down, 41.4. If we can break through this 40 level on the predicted RSI, that will trigger a much bigger move to the downside. Now, again, if oil could not weaken the Canadian dollar here, then that's telling me that either way, the Canadian dollar is potentially getting to rally. So for this week, we want to watch the 135.05 level very closely, and more importantly, this top of this upper channel here at about 135.60. As long as we're holding below 135.60, clearly the bias based around the indicators is to the downside. Now, as we look at our final two commodity pairs, Aussie and New Zealand, Aussie's putting a bit of a top in here again at 75.50. Nice call here from VantagePoint on this move off of the 73.50 area. Myself, my clients, we've been trading this one pretty heavily down off that area. Now, the current indicators, what are they saying on VantagePoint here? Our critical level comes in at 74.71. We're moving sideways on our predicted differences. Our neural index is down, so we should anticipate, again, some dollar strength. But longer term, it's not looking overly good for the dollar here. So the Aussie could be recovering. We want to keep an eye on gold prices. But the predicted MACD crossing over the zero line after the crossover and the trigger, that's a warning sign that basically, along with the stability of the Aussie economy, it would point to further gains ahead after some sideways movement. Our predicted RSI looking good at 60.5, but again, expect a corrective move down to 74.71 to begin the week, and we're going to be looking for that area to hold, potentially a very good buying opportunity there. Now, our final pair, New Zealand US, we've got a fairly significant swing high. This was a great trade here from VantagePoint. If we look at this, and this would go back to February of this particular year, we had congestion here. Then we had this triple EMA cross from VantagePoint, a big sell-off from 72 all the way down to 69. But we've been making new lows. Absolutely we have, but we've had a pretty strong rally. This swing high up here at the 72.50 area, we want to break free and clear of this. So just be a little bit cautious around 72.50. I think longs will be on the table, but only after we get through the FOMC. So once again, a very busy week, but hopefully it's a profitable week for everyone.